All right, family. Good evening, good evening. I wanted to make this video so I can illustrate what high probability supply and high probability demand is. I talk about it a lot, but it's really good to illustrate so we can get the picture and burn it in our head. What I mean by high probability is this. So the market shot down, right, to a demand. When it shot down, it created the gap that we talk about a lot. And then we have some consolidation, some manipulation going up and down, whatever. And then we have a shoot up, right? The shoot up created the change of character. The change of character is the base, then it rallies. So what we're looking for now is the second touch down here, which would make this uncontested. It created the supply. This created the supply. So now it needs to be touched to make it uncontested. Once it taps in, we have this. Let's go over here. We have the gap that we know that the gap that needs to be filled. We know that this created an uncontested zone. So this is uncontested. So all we're doing is this. Obviously, there's three ways of doing this. So we're looking for a candle to come in to reject and close as a rejection. Then after that, we're waiting for another candle to break it. Right? Really simple. Once that candle breaks, and obviously, let's make some structure here. No, just some, some little noise. All right. Once this market breaks on the M5, we can go long. Depending on what pair it is, obviously, 25 pip stop loss, 25 pip TP on M5 works out well. But something like this, I'm just going to put the stop below the zone. And then we can target the last high, or you could target up here, depending on what the market is looking like. And then it'll make its move. I like 25 pips. So 25 pips will be right here. But if you want to target the previous high or target this one, whatever. That is basically what we're doing here. It's simplest form. Now, obviously, you can get in aggressively. But if you get in aggressively, you got to deal with the fact that if it doesn't stick, it's just going to come down and smack your stop loss. Or you can put a limit order in. So when this closes, you can put your limit order right here and then just go on about your business in your day and just come back and see what happens. Or you could just wait for the break of that candle and just get in. That's all we're looking for. And same with supply. It's the gap, it's the consolidation, and then the market pushes down, and then it comes back to retest after the push down. And then you go short. We take out that previous high or wherever there, whatever we're looking at. It all depends. Same setup. So you got the candle right here, the rejection, whatever that does, and then the candle that breaks. Once the candle break, you can get in right there, or you can get in aggressively, or you can put the limit in and let it do its thing. But honestly, the first target is the low that it made. Second target is whatever's down there. That's basically what we're doing on the M5. the M15, M30, H1, H4, daily, weekly, the same setup, high probability. Now there's other supply and demands that you could take, but high probability works out well. So these are the ones that we want to take. So take a picture of this. This is your picture. This is how you want it to be. Uncontested. We want uncontested. It created the supply, created an uncontested supply zone. We either get in aggressively or get in on the break or put that thing in, and we take it to wherever it needs to go. That's what we want to do. That's high probability. I learned this from Doyle. He's a trader that trades supply and demand, but this is how he trades his supply and demand, and I ran with it. It works. It works on every time frame. All the trades that I take are based off of this. They're based off of this. Either sometimes I get in aggressively, sometimes I put the order in, or I just market execute. Either or, this works out perfect on every time frame. So let's go on over and look at it for this UJ. So the UJ that we saw this morning, it was just on the uptrend. So it made somewhat of a consolidation right there, and then it shot up away from here. So let's do this. So when it made that zone, and obviously from that wick to that wick is the change of character. Once it broke above that wick, that was letting me know it's time to come in and scale in. Obviously there was news. You know, you could put it below and come to that previous high. In the ideal world, it should look something like that, and you'd have been out the trade. Stop losses did not get hit. You'd have been out the trade in 15 minutes. A skilled trader would have got in right there because it was news. But, you know, we just got in right there. Now, news did it, so this wasn't really a good illustration of the break and wait for the break and all that. But this was a quick tap, because sometimes they'll just tap real quick. So you got to decipher: is it gonna tap real quick and go up, or is it gonna do this? So it's two different ways of doing this. Sometimes it tap it and quickly go up. Those are beautiful. We love those. That's high probability as hell. We love those. We want that tap and go up. We'll be out the trade and go chill with the family, you know. So that's the demand. Let's go to a supply. I think Euro. Is it GU? No, Euro USD maybe. Yeah, Euro USD. So there it is right there. I already got it available for you. Let's go out of replay. So consolidation, market drops. So I already know it created the imbalance, so it needs to fill in that whole imbalance. So this is a perfect one right here. Imbalance, it has to fill the imbalance, and I love it. I love when the imbalance got to be filled and there's a zone right there. It's so beautiful. And you know, you can just come take out the previous area. So, you know, it comes up. All right. So it's at the zone right now. So what we're waiting for is, do you remember? The break, the rejection candle, then the break candle. So let's see. So we got, that was the rejection candle, but that candle didn't break it. This one did. That's what we get in. We don't have to put it all the way above the zone because it already broke our, and we could just come take out the lows. And actually, ooh, it tapped it again. See, stuff like that, when it come tap it again, see how it tapped it again? Let's see. And then right there, I would have got in again. I like seeing that. I would have got in again right there again. I would have been 2 positions in. And look at that. Now I got 2 positions. And I'm out of both of them. So I would have got in on that one, and it came up and then broke that one again. I would have got in right there. Beautiful. Beautiful trade setup. And this is what we're going to do on the M5. This is how we're going to do it. And then obviously, like I said, see, we're not going to focus on the higher time frames yet. We're going to teach, they're going to keep drilling this type of trading into your mind. And you guys are going to have homework. And I want to see some consistency. I want to see you guys find high probability trade setups. And then once we master high probability trade setups on the M5, we'll go over to the 15, then the 30, then the hour, then the H4, then the daily, then the weekly, then the monthly. And then at that point, you guys are scalpers, intra-traders, and swing traders with the same trading style. You're gonna and obviously all of this is gonna be in cahoots with the time frames. I want you to be in cahoots of every time frame, in harmony. These moves got to be in harmony of the time frames. And from there, y'all gonna be some bomb traders. We all gonna grow together. That's how it's supposed to be. So y'all got homework to do over the weekend. If you're watching this and it ain't the weekend, you know every weekend is homework. So come back to this video and look at it as much times you need to, so you can understand what high probability M5. This is M5. I'm gonna make one for each one, but I ain't making the other ones yet. We gonna master M5 first. High probability M5s. And with that being said, I'm gonna make another video because these M5s have to be in cahoots with the at least the hour. So the hour, like it has to be like, see how it's bearish for the hour? That's letting me know. I don't even have to make a video. I'll just tell you now. When you do these high probability trade setups like this, UJ is already on the uptrend. And look, you can come over here, there go a candle right there. You can clearly see that it's sitting right there. So that way, when you come over here to the M5, it makes it easy for this trade to even be. Because here on the hour, it already was bouncing off that red candle right there. You get it? So come over to the hour, the M30 sometimes, to see if your M5 setup is in cahoots with that time frame, and it'll be better. All right. With that being said, peace.